Closing bell, let's start commodities now, where we have had a good day, especially in case of the energy space, where the crude oil prices have continued to hold firm. Another day where we have seen 0.5% of gains continue to hold. It also has to do with the weakness in US dollar, which actually has led some support, not just to the crude oil prices, but the metal space as well. So gold and silver prices back at multi-month highs. And we are seeing many of those metals as well, including copper, nickel, zinc as well, continue to do well in the markets. So almost everything in the global commodity space has continued to be on the higher side. To talk further about that and to help you make strategies, we are now joined by Preetham Patnaik from Reliance Commodities. He joins us now on the show. Preetham, hi, good to have you. Let's start with the crude oil prices first. And we seem to be building up on the 20% gains that crude already is standing on for 2019. And now the fundamentals seem to be getting further bullish on whether it's about the OPEC and the allies cut or the US output growth expected to slow down in this year and a decline in US inventories. How are you looking at the prices, and do you think it still is fair to continue to hold longs?
So, Manisha, you're right. This is the only choke I've seen adding life to something. And the supply squeeze is actually adding a lot of support to the crude oil prices. We need to understand that apart from the supply side, we've also seen sanctions which were there on exporters like Venezuela, Iran has continued to provide support. Right? So OPEC, which had targeted around 1.2 million barrels, is well in the way to doing that target. But, if you see the recent statement which has come out from the oil minister, it indicates that they are not in a hurry to kind of end this. So we expect this tight squeezing to continue well beyond June. And you might even see some more additional cuts coming to counter the excess production coming out of US. Correct? And to that extent, the April 17 and 18 meeting is extremely important to watch out for. Meanwhile, you've seen Saudi Arabia has already, is producing less than about 10 million barrels per day. And despite a strong international demand, the exports is expected to be well below 7 million barrels per day. This is keeping a tight squeeze onto the crude oil prices. If you look at the CFTC data, also hedge funds and the other speculators have raised their combined futures and options position in New York and London by almost about 22,000 contracts. So this is also kind of providing a little bit of support to the crude oil prices internationally. So, but not only the fundamentals which is promoting it, as also the money managers who have kind of bought into this rally to some extent.
Sure. Yeah.
Correct.
Yeah.
But we'll have to be. So our call is very simple. We are saying that we want to buy on dips. So we will buy at about 950, 940 level with a stop loss at 38.50 and a target price of 4090.
What also is your sense, Preetham, on the metal space? Because while, of course, crude has its own fundamentals, but what really is, impacting both these scenarios is Brexit, the US and China trade concerns.
Absolutely.
And then, of course, we also have the US dollar movement, which eventually will tell us on where we are headed. So when it comes to the metal prices, which one are you picking up? And do you see further gains from here on? Because until now, in 2019, it has been a good run for the metal prices, most of them double digit up. But do you see this performance repeating itself over?
See, in the commodity markets, I would still talk in terms of near terms. We saw the rally in copper specifically because, copper in LME warehouse, the levels were the lowest since 2008. And concerns about a tightening LME market has also created a premium for the cash over the 3-month contract period, if you've seen. So, while in the short term, I'm still bullish on the metals prices and specifically to zinc, nickel and copper, not so much as aluminium and lead. We cannot ignore the data which is emerging out of China. Most of the base metal you say started on a weaker note because of the Chinese data which came out, which pointed towards a slowing economy despite the recent stimulus measures that we've been seeing. Right, Chinese export fell, to almost a 30-year low. Literally, and this is kind of a worrying sign. The imports fell to a 30-year low, which is a very worrying sign. So in the short term, we will continue to be bullish in base metals like copper, where we have a buy call in copper, where we are going to buy at about 449 levels to 447 levels with a stop loss at 442 and a target price of 457.
All right, we've noted down those strategies. Preetham, thank you so much for coming by and helping us make sense of the commodity price volatility that we have seen during the day today. But with that, it's a wrap up on this edition of Closing Bell.